Chart of the Week with Redmayne Bentley.
You're listening to financialradio.co.uk. My name's Giles McMullen, chatting to Bill Rook from Redmayne Bentley. Bill, we're going to be looking at a few charts today. We're going to start with the FTSE 100. For anyone that's been tracking this index, it hasn't been much fun, has it?
Not really, no. I mean, the exciting part really was in January when we picked the bottom of the market, I think, and it hasn't got there yet. Why hasn't it got there yet? Because the volatility hasn't increased enough. It seems to have flattened off, and that's indicated by the ATR at the top of the chart there. It's just flat.
Yeah.
What we want to do is have a surge of selling, and that will propel us into a mode of a possible speculative buying like we did in January.
Yeah.
We made about 20% in about 18 days on that one.
Which is
so I'm looking for that.
Fabulous return. Any sign of that at the moment? I know you've just talked about that particular indicator, but have you got? Is the feeling that it's more likely to do that than to just carry on sort of drifting downwards?
Well, it's drifting. This is the thing. It's drifting downwards, supported by oils and mining stocks, and a little bit of rumour of takeovers here and there. I mean, it's the oils and the mining stocks which are keeping up the market, propping up the market at the moment. If they weren't for them, that would be much lower. So. While the oil price is still bubbling, not. And this is going to temper the enthusiasm for a massive sell-off at the moment, I suppose. But if it did, I'd like that to happen so we can get in there. I mean, it just isn't. I mean, the slopes on the market aren't low enough. I mean, it just isn't there yet. The Ultra Index isn't high enough yet, so we haven't got the pain threshold up yet. So as much as it's a sort of a drip effect, the pain is not high enough yet to warrant looking for a contrary situation of going long.
Okay. All right. Well, that's the FTSE 100 in brief. Let's move on to a couple of other charts that you want to have a look at. Let's start with AIGC. Now, tell us a little bit about this.
Well, this is simply, it just tracks a commodity index rather than a portfolio of equities. This one has stayed up reasonably well. It's made up of, we've got 33% energy, 10% precious metals, 20% industrial metals, 7% livestock, and 30% agriculture. And the energy is really supporting this at the moment, doing very well. And this is a mix. We were talking earlier, Giles, about approaching commodities, and I think one of the best ways to approach commodities, and this is probably a learning curve for everyone, including myself, is to take on a basket. And by having a basket, you capture, in essence, the trend. Now, it wasn't very happy in March, this one. You can see it fell away quite quickly. But actually, overall, it hasn't done too badly over the period of time. So a longer-term approach with a basket. And you can see the 200-day moving average amongst the sort of medley of indicators there. It's the darker one, two off from the bottom there, which is sort of trending upwards. So the longer-term trend has been intact. And this has been tracking it quite nicely.
And this is an ETF, is it?
This is an exchange-traded fund, yes, tracking the Dow Jones AIGCI index. So it's just tracking an index, which is chugging along quite nicely at the moment. So the volume trend has been good. The overall trend of it could be stronger. It was stronger, very much so in February, March time, and then it boiled over towards the latter part of March, and it's recovered since. So as against the market, equities are a bit soggy. They're worried about assets, they're worried about cash flow. Lots of things are worrying. You name it, can be worried about it in the market. Even the oil price, of course, must be a factor for a lot of people. And an inflationary factor is the biggest problem there. But while that's that side of the counter, this side of the counter is benefiting. While the prices are feeding through, it's going to mirror quite nicely in the commodity market.
And as we sort of move into what I suppose all the experts are expecting is that an inflationary period, then it's a good place to have your money, really, isn't it?
Well, it's not bad to have a hedge there. I mean, if you actually sincerely believe or bemoan about the commodity prices going up and up and up, get straight into commodities. Have some exposure there, and it's a good asset class. It surged a bit too fast in February, early March. So, and then it tails off quite quickly. And this is the problem. It may have tainted the palate for a lot of investors because of what it did then. But there's nothing without risk, and I think this is part of a portfolio which I think everyone should have. Really, who's serious in the market, have something in commodities, albeit in oil, gold, or the grains. And this matches everything everything together and comes out with a reasonable result, I think.
Sounds a good idea to me, Bill. Now let's have a look at the final one that you want to look at today is Sibir Energy. Tell me about this one.
Well, this one is on the. Just thinking, it's in the east. Of course, it's drilling away and coming up with some great results, and it's moving strongly. It's tripled output. The results today are fantastic, and it's surging towards £8. Just unrelenting good news coming from this company as it drills away, and it's now looking for a main listing. And on the smaller company front, it is a name-listed company. This is outperforming the index or its sector and looking very strong. So looking very good, I think.
And you'd be a buyer at these levels, would you?
Yeah, I would be a buyer. Looking towards top end of 950. The red line at the top there suggests where we might get overbought. And this is an area where I wouldn't be chasing it necessarily unless it has high volume. Now, if you remember last week, we looked at Ramco, and that had high volume above that line. When you have high volume above that line, supported by positive price action, then you can get all sorts of exciting things happening. And that, in fact, Ramco has doubled in the 9 days. We'll look at last week's chart for that. This one is bigger and is lumbering along quite nicely, but in the same area of oil, it looks very, very good.
Bill, thank you very much for chatting to us today. That's Bill Rook from Redmayne Bentley with his chart picks for this week. We'll be chatting to Bill next week as well on financialradio.co.uk.
Thanks, Charles.
Chart of the Week with Redmayne Bentley.